IBC, as easy as 1, 2, 3. So what are the steps to start the infinite banking concept or a cash value life insurance policy? Because that's what the concept revolves around. Step 1, learn and understand the concept. What is the infinite banking concept? How do I actually implement that? That's step 1. Then step 2, that's where the detailed learning begins. Companies and products. What are the different ones out there? Flexibility. How do I make a policy as flexible as possible? This way I'm not locked into a premium bill and pay the same amount every month or every year. How do I make it as flexible as possible from a contribution or payment standpoint? Loans, loan interest, extra payments. What are the different loan rates? How do I take loans? Are they sent direct deposits? Do I get a check? Can I take them anytime I want in the first year? I want to understand all that fully. This way, I don't figure something out after the fact and have buyer's remorse. Cash value maximization, and we've got splits underneath this, meaning if I'm going to put any amount of money into a policy, if it's $1, how do I maximize the cash value of that dollar? How do I get as little towards insurance, or how do I understand how to get as little towards insurance, as much towards the cash value component? And this is all in the initial education piece. Step 2, decision. Ask yourself, have you seen enough to make a decision? Do we understand it? Are we confident with moving forward? Then we've got underwriting, application and medical exam. So that is all under the same umbrella. So when I'm ready to start, before I can actually pay money in, I say, yes, I'm ready to go. I like option C. This is what I want to proceed with. But I can't start right away because I've got to go through underwriting. What that entails is an application. So the application can usually be e-signed with a particular insurance company. We actually have a questionnaire we send to everyone we work with first that collects all of the data, and we populate the application with the particular insurance company. They email it to you, you can e-sign. In some cases, in most cases, a medical exam is required as well. This is no charge to the consumer. A nurse will actually contact you, can meet you at home, work. Usually they're very accommodating, and they take blood, urine, ask medical questions. They're checking your overall health. Now, this does not lock us into anything. So once I start the underwriting process, that does not mean I am locked into a policy. If I decide to underwrite for $1 million and only want to take $100,000 or any amount, I can easily do that. Meaning I can make adjustments after the underwriting is complete and even during the process. Step 3, approval and initiate. So when I am approved, I'm going to receive a health rating. The common 3 are non-smoker, preferred, and ultra preferred. Finalize the numbers. So I can make any tweaks to the design during and after the underwriting process. When I'm ready to go, here's how I want to start the policy, right? I want the ability to pay in $50,000 per year, but I don't want to commit to it. I only want to start with $5,000 or $10,000 and have the ability to add more at my discretion or one time a year, however I set it up. Start the policy. To do that, that would require an initial signature and initial payment, whether I'm paying the minimum monthly or yearly or starting with a lump sum. Then the latter steps is 1, set up an online account. We do this with everyone that we work with. Once I have the policy, once I started it, this online account allows me to track the values. With some companies, I can dump money in. I can take loans out, repay loans. It gives me a hands-on approach. This way, I don't always have to call up Steve or whoever I'm working with to get to my money in my policy because it's my money. I want to be able to get to it when I want. However, you can also work with us or your agent to obtain the funds as well via loans and such. And then review meetings and review calls. This is important because things do change over time. Maybe things change with our circumstances. We pay in different amounts. We have loans outstanding for a longer period of time than we thought. The company's dividend rates change. The industry changes. Review meetings, just keeping your finger on the pulse of the company, our product, how much we're paying in, is important. And what's really fun to do, I'll use this word, is when we start a policy, what did that projection look like? And then each year, as we have those review meetings, we have them twice a year, but on the annual review, what's the actual performance look like compared to the original projection? Is it better, worse? How closely is it performing? And we've talked about 4 major mutual companies because we've seen strong actual results, but regardless of the company, we can track that original projection and then the actual values and see how things are moving. So IBC, as easy as 1, 2, 3. Hope this helps.